All right. Hello, evening, everybody. All right. Now, so welcome to Portfolio Cash on Fridays with Terence over here. All right. Now, just a very, very quick one this Friday because we're going to look at our portfolios. All right. And then see what we need to do. All right. Act on whatever we need to act on. Right. And then I'm going to add a new position today. Yes, I prepared a new position. I'm going to add more cash into my portfolio and then we'll call it a wraps. Okay. All right, now, so I did remember what I make a post, all right, and promise all of you, all right, what I will be doing today, okay? Now, but first, let's get the hellos out of the way, all right? Thank you, Jimmy, for joining us again, all right? Kokyong, hello, all right? Chong, all right? Donkel, yes, you should be hearing my sound and voice right now, all right? Hiet, hello as well, and Facebook user, all right? Hi. All right, now, so if you're joining us for the first time on this Facebook Live, right, you will see a banner that says streamyard.com/Facebook, right? Please type it. Please go to the link. You'll see a Facebook blue little button, all right? Hit on it, all right? And then we will start seeing your profile like all the others over here, all right? Hi, Eileen. Hi, Nelson, all right? Now, so without further ado, I also want to start putting the disclaimers out of the way, all right? Now, so if you are joining us also, all right, now in this session, I will be discussing live trades. I will be taking portfolio actions on our model portfolio, which is a live one, all right, that we use and trade on every single Friday session, all right, now. So please be aware that all forms of trading, all forms of investments bears a risk of loss, all right, now. So you need to know exactly what you're doing. You need to know all the risk involved, all right, and also make sure you're very comfortable with whatever you're getting into, all right, before placing any trades live on your own accounts, okay? Whatever I do over here, right? It is by no means any form of recommendations at all. All right. You need to know exactly what you're doing because your investments, all right, okay, it is your money. Yeah. Okay. Now, so in short, that's pretty much it. All right. Now, so let's go. Let's go. All right, Jimmy. I'm going live using StreamYard. All right. Thank you, Jimmy, for typing whatever I'm trying to say. All right. You got me stunned there for a little minute. All right, now, so I did promise all of you, all right, to provide a market update. All right, let's go to it, yeah? All right, let's get our market update out of the way. All right, now, take a look, everybody. Where are we this week? All right, looky. All right, where are we? All right, now, so I did say that the market will trade between the 470 and 455 levels, all right, and it did, all right, but this week we have broke that level over here. All right, and today, all right, we are trading at another key support level. All right, now this key support level is going to be 445. All right, now let's see if it's going to hold, all right, for this week before it ends off. All right, now if that doesn't hold, we will see the market challenge the next support level all the way down here, all right, at 4,350. All right, 4,350. All right, now, but be very aware because 4,300 is the last threshold. All right, if the market can break below 4,300, right, we may start to see a more fierce, all right, claw from the bear over here. All right, at the moment, yes, you know, things look down, all right, but it is not down and out. All right, now, why do I keep insisting that it's not down and out? Right, because the market is still not in panic selling mode yet. All right, now, how many of you who are with me live right now actually want to learn, right, or want to know how do you tell, how do you see when the market is full out? Right, in a panic mode? That means it's a panic selling mode. All right, sell all, sell everything. All right, and you should be very, very careful. Right, if you see these kind of signs. All right, how many of you want to see that? If you do, all right, can you just type me in the comments? All right, so I know you will be interested. All right, Jimmy, always the first one these days, yeah? All right, Sharon, hi. All right, here as well. Okay, now, so let's go. Now, I did promise that. All right, now, it's not actually something very, very tricky, something very difficult. No. All right, now, because, all right, if you are seeing an all right, sell off, sell everything that's available in the market because the panic button has been hit, right? Now, this is what you need to see. All right, now, this is basically none other than the sector ETFs. Right, and we have, I think, 1, 2, 3, 4, 5, 6, 7, 8, 9 sectors over here. All right, now, if it is a flat out selling, all right, all 9 sectors should be red and it should be ugly. All right, but can you see what's happening right now? All right, we have what we call the market rotation game happening again. All right, they are trying to do whatever they can. They are playing whatever is in and available on their playbooks to keep the market in a good mode, to keep the market in the good zone right now. All right, so you can see that some money is moving back into the technology sector. All right, okay, because if I click on this, right, you will see that this is the consumer staple sector, right? Because this is the consumer staples, all right, okay, and it is up by about 1% today, all right, and then utilities, all right, is also up by about 0.5% today, all right. So today is what we call the defense mode, all right, okay. Money is moving into consumer staples, money is moving into utilities, all right, but money is hit hard, all right, on what is this, right? Consumer discretionary, all right, now, and then money is hit hard, all right, on home builders, right? Why home builders? Simple, interest rates, everybody, right? Inflation is the main play of the story right now, right? People are starting to feel the pinch. People are starting to feel the realization of inflation, all right? And home loans across America are starting to see interest rates shooting up overnight, all right? People are scrambling to lock in and lock down fixed interest rate home loans right now, and they can't get it approved, all right? Why? Because the banks are not silly. All right, the banks are jacking it up. The banks are marking it up. All right, so soon we may start to see a spiral, right, in the home builder sector. All right, and also energy. Money is moving out of energy. Why? Right, because it has been having an excellent run over here. All right, so this is about a market correction. Right, so some profit taking on the energy sector. Money is coming out. Yeah, okay, now and financials. All right, the banks haven't been doing too well right now. All right, in the financial reports. Right, so this is a steep decline that you're seeing over here in the financials as well. All right, okay, but while there are sectors that are not doing well, all right, we still have sectors that are up by about 1%. All right, now, so market is still not in a sell, all sell, everything kind of panic mode at the moment. All right, it is holding, to the brink. Right, it's still trying to hold on over here. All right, to whatever they can. Yeah, all right, but be very wary because, all right, if we have another severe downside, and like I said, all right, if if the S&P 500 can break the 4,300 level, right, that is where, all right, everything opens up. All right, at the moment, the bulls still have the main play. All right, the bulls are still screaming, the bulls are still charging. Yeah, okay, they are weak right now. Okay, they are taking a break, whichever way you want to call it. Yeah, okay, but they're still lurking around. Yeah, okay, the bears are not clawing hard yet. All right, now, so the bears have not won the fight as yet. All right, so be very wary if you're intending to go short. All right, and also, all right, it never, ever makes a good trade, right, if you are shorting into a market that has already moved. All right, okay, I seriously don't know why do people do that, right? Because of the fear of missing out, all right, or whatever it is, greed, however you want to call it. Right, but can you see the move? It has already moved, everybody. Right, the S&P has moved after hitting the resistance at 470 all the way down to 445. Why would you enter and try to go short right now? Right, what can you stand to make out there? Yeah, okay, versus a quick rebound. Right, why? Because the play is not over. Right, the market can always hit this support level, right, and then challenge the high again before it drops off and die. Yeah, all right. We can see that. Yeah, all right. Markets won't just give up, right, on the very first attempt down. No, all right. You will fight, all right, because the bulls still believe, all right, that they are not dead yet. Yeah, okay, all right. Now, so don't exclude that out. That's always a possibility. All right, now, so now that it is out of the way, all right, let's get to our portfolio. Let's see what's in store. Okay, all right. Now, so let me pull out our portfolio over here. Right now, our first position is VZ. All right, we have a $55 call option attached, right, to the stocks that we have been assigned. Okay, all right, now, so let's see what's that position doing right now. So we have VZ over here, all right, that's trading at about 53.50. All right, I have nothing to worry about. And yet again, I should be holding across the earnings over here. Why? Okay, simple. This is an investment portfolio. Right now, if I'm doing trades, if this was my trading portfolio, I would get out of this trade ahead of earnings because, right, earnings is always a second guess. Right, I don't want to take a position, all right, where I head into earnings, all right, and then things can turn wrong. Right, it doesn't make sense. But for an investment purpose, right, then everything is different. All right, why? Because I'm already owning the stock. Right, I've set aside the capital to own the stock. It doesn't make a difference to me at all. Yeah, okay, and I'm collecting income by selling call options on it. Yeah, okay, so no actions on this position. All right, the next one that we have is Rio Tinto. All right, what was, all right, an absolute taken away stock last week, all right, it came back down. All right, now, so we have a call option that expires today as well. All right, now, so we have the 74, all right, 74, 72 call option, right, that expires today. All right, we can, pardon me, sorry about that. All right, now we can pay about, excuse me. All right, we can pay about 25 cents, right, and get this call option closed today. All right, and we will collect about half the premiums. Now, what I want to see right now is this. I want to see that if I do make this move, right, if it makes sense for me at all, right? Because if I close this, I'll probably go ahead and sell next month's, all right, call options on this, all right? And yes, I'm going to go ahead and do this, all right? Can anybody tell me why it's a go ahead and do this? All right, Jimmy, I apologize for that. I just saw your question turn up. All right, now, so while waiting for your next reply, because there is a little bit of a lag, all right, let me also answer Jimmy's question. All right, are these indicators representative of all sectors in the market? Yes, they are not indicators, Jimmy, all right, but they are what we call the sector ETFs. Yeah, all right, you can actually invest in them just like buying the SPY, right? But these are sector related, right? So they comprise of, right, some of the strongest stocks in each business sector itself. Yeah, all right, okay. Now, so I hope that answers your question. All right, now, anybody want to give an attempt on why I will go ahead, all right, to close out the 74, close out this call option, all right, that we actually have that expires tonight. All right, I'm actually willing to pay 25 cents for it. Yeah, okay, so go ahead and close this and pay 25 cents. All right, if you need to, just pay 30 cents to get it closed. All right, okay, and we did that. All right, today is the 21st of January. All right, now I paid 25 cents to close it. All right, and it brought us about $81 in cash flow. Anybody? Nobody? Oh, man. All right, whatever I've been doing on Friday. Nobody understands. All right, Don Cal. All right, now it is not getting the buying power to sell a new call, right? Okay, yes, I'm selling a new call after this, right? But the reason behind it, all right, is because, right, the premiums justify. Yes, thank you very much, Maudrine. All right, well done, Maudrine. All right, Maudrine has got it right. Okay, I'm happy to see this, Maudrine. Yeah, all right, good. All right, you're learning. All right, I see your improvement over here. Well done. All right, now, so I'm going to go ahead and sell the Rio, right, next month expiry option. All right, so good eyes over there, Maudrine. All right, why? Because if we do this right now, all right, okay, let me show you what it's worth, everybody. All right, Maudrine, good eyes. All right, not only can I move it to a 75, all right, I can actually move it back to a 77.50, right, and actually get 145 for selling this call option, everybody. Right, 145 for selling this call option. Why should I not? Right, it makes absolute sense over here. Right, but first, right, let me do something. Right, let me have a look. Right, I can break even, right, with just $75. Right, okay, but my stock I paid $77.20. All right, after this collections of whatever I've done. All right, let's see if there's some earnings around the corner. Okay. Earnings is not until the 22nd, so that's after the 18th of Feb. All right, so I'm gonna go ahead and take the 77.50. All right, okay, there's no earnings risk. All right, I should be aware of. Yes, Sandra, well done. All right, so everybody go ahead, all right, and close the Rio that you have. All right, and then open up the new one. Okay. All right, so I have two of these call options. Oh, man, hang on a minute. All right, now, so I have closed the January, all right, okay, 74.72 by paying 27 cents, all right? I've submitted it for 145, but it's still not filled yet, all right? So we're going to wait for that, okay? Now, so while going ahead to the rest of my positions, we'll wait and see if we can get our 145, okay? Now, so let's move to our next trade over here, all right? Now, that is done and out of the way. We'll come in and fill the details after, all right? We have Tupperware. All right, that expires today. Tupperware, $15 strike. All right, for 35 cents. Okay, Tupperware. Oh, no. Let me add it back. Okay, all right, we are under on Tupperware over here. All right, so I'm going to take delivery on the stock today. All right, so do nothing. All right, but come next week, all right, you will see my stock position on Tupperware. Okay, so let me go ahead and copy this down. January 21st, $15. All right, now, so when this option expires tonight, all right, the value is as good as zero because we are going to be assigned the stock. So we have collected $105 in this cash flow. Yeah, all right, so $0, 21st January. All right, but we will have to buy the stock. So we'll pay $15 to buy 300 stocks, which cost me $4,005. All right, and the cost basis is going to be around $14.70. All right, $14.70. All right, it's my break-even price for this stock right now. Okay, now let's go to eBay. All right, I have a February $60 put, which I got $170 for it. All right, so eBay. Is it a $60? Yes, $60 put. All right, so the stock is still trading around $60. So I'm going to assume that we don't need to take any actions at all. Yeah. All right, so 18 Feb, $60. All right, it's about 290 right now. So we are underwater. All right, so I'm going to leave it. All right, now next one, Himax. All right, so we returned to the market and sold the Himax $11 put, 4.52 cents. Right, with the market down right now, all right, I would see that premiums are going to be very rich because there's a little bit of panic going on. All right, and it's 115. All right, so this is underwater at the moment as well. 115, yes. All right, but we'll leave it. All right, so the next one we have is EAT. All right, I have EAT 18 Feb 35 puts. All right, let's have a go. EAT 35 puts underwater as well. All right, but you see, just like many of the trades that happened to us in November. Yeah, all right, I'm more than happy with it. I'm more than comfortable with it. All right, so I'm leaving it. Yeah, all right, now, so this doesn't expire till February. All right, so I'm all good. Yeah, all right, now, so that sums our portfolio, but it doesn't stop me from wanting to add a new position in. All right, now, number one, why would I want to still open a trade right now, Terence, when the market is down and out? Simple, because my portfolio has cash. Right, that means there's idling cash that I should put to work. Yeah, all right, now so there's idle cash that I should put to work, so I'm going to do just that over here. All right, so we're going to go back into another stock, right, that has made us money. All right, okay, so I'm actually going to plow back into Abercrombie and Fitch, everybody. All right, now why Abercrombie and Fitch? Because, all right, nothing has changed. Yeah, all right, the stock has bounced up. All right, we kind of got out of our trades. All right, but now it's back down. Yeah, okay, so now it's back down over here, right? And earnings doesn't come till the 2nd of March, all right? So we can sell next month's options, 18 of Feb, all right, for the 30 strike, all right? So we can collect about 140 for this. Yeah, all right, so I'm gonna go ahead and do this. All right, I'm gonna add this position into our portfolio, all right? $30 puts, all right, for about 140. All right, now I sent that order in, but it's not taken yet. All right, oh, it's taken. All right, now, so our Rio 77.5 call for February, all right, is also done. All right, 145, I've got it filled. All right, okay, and my just went in order, Abercrombie & Fitch for 30 puts, right, have been sold for $1.40 as well. All right, there you go, there you have it. All right, I've opened the trade today. All right, let's see our cash collection. All right, ANF. right? 18 of Feb, $30 put. Can you see it's the exact same trade, right? Just, done 1 month later for expiry, right? So 21st January, right? And we collected 140 for this, right? So this is going to pay me $420 in cash flow, right? That's a good return, right? 140 divided by $30, right? This is a 4.67% return, everybody, all right? And if I'm not wrong, all right, how many weeks are there to this expiry? All right, let's check it out. 28 days, 7, 14, 21, 28. That's exactly 4 weeks. All right, so I'm going to divide this out by 4. All right, and then analyze it. Oh my God, this is a huge return, everybody. All right, this trade, if it works out by next month, right, we're going to make a 60% annualized return. All right, yummy, yummy, yummy. All right, yummy, yummy, yummy. Yeah, okay. All right, now, so why am I doing this trade? All right, now, for those of you who have not joined us for the previous set, all right, it's a fundamental based trade. All right, why? Right, yes, it's a retail stock. Yes, it's been hit hard. Retail has been hit hard, but right, December has always been a good season, all right, for most retail stocks. Plus, this company has always been profitable, all right, and it's trading at a 7 PE, all right, with a market that's expensive, all right, with a market that's coming down. So if more money comes out of risky assets, right, they will start going into undervalued companies which can show profits, right? So that is actually where Abercrombie & Fitch can be a beneficiary, right? So I do see it in Abercrombie & Fitch. That's why I'm taking a position into it today. Yeah, all right, now, so that is the one stock I'm adding a position on, right? It's going to bring another $400 in cash flow if it all works out. Yeah, all right, for this trade over here. All right, now that's it. That's all I have that I want to do for my portfolio today. All right, and for closing over here, I just want to share with all of you. All right, now if you're new with us, what we're doing in this public portfolio session, yes, it is done for public purposes over here. All right, now, so members who are joining me in this Facebook Live, right now, if you like any trades that I'm doing over here, you have to bear in mind, I take these positions because I have a longer term focus, right? I'm in it for the longer run, right? So these are not the same as the trades that we would do, right, in part of our mentorship programs, in part of the live trading sessions that I do with you every single week. Yeah, all right, so it's totally different, all right, because the thought process behind selections are different as well. All right, so you need to tweak them, right? You need to decide if you like what you see based on whatever I've taught you before going ahead and initiating any trades at all. Okay, yeah. All right, now, so we are selling only portfolio puts in these sessions, which means all my trades are allocated full cash amounts, right? In an event where I have to end up taking the shares. All right, so I am ready to be a long-term investor, long-term owner of any of these shares that I'm selling put options on. Right, so that's how the trade is structured, right? And all the ROIs that you're seeing over here are based on the full cash amount as well, right? So there are still good returns over here. If you see this, right, the Abercrombie & Fitch today that we take, all right, will cost me $30 per share, but I'm collecting $1.40 for a 4 weeks trade, right? Plus, right, today the stock is still trading at what, 31.60, right? My put options at 30, right? And the stock has already fallen from 35, right, to 31. All right, so the stock has fallen by almost 10%. All right, okay, and I can still let the stock fall by a further 5%, right, before I have to buy the stock up. All right, so by the time, if they make me buy the stock, right, I'm buying it 15% cheaper from its recent high. All right, on a 7 PE stock, I think that's a good buy over here. All right, and I'm definitely going to be comfortable with that, right, coming in from a value perspective, from a value stock, which I'm buying. Yeah. Now, I hope you understand what I've just said over here. All right. And all right, now with that, okay, I would like to bring it to a close. And EL, you always like to shoot me questions like this before I end. All right. But I'm more than happy to entertain this. Now, I will avoid these stocks for now. All right. Why? Okay. Because there seems to be a pressure that's going on in the markets on financials. Why? All right. Because with the sharp increase in interest rates, all right, although it is good for the bank's profit, but there is only a threshold where it also starts to hurt the banks, right? Why? Because when the interest rate gets too high, right, these banks can't loan money, right? Nobody wants to take loan. Just like what we say, house prices would drop. Why? Because it's too expensive to furnish, to finance these loans anymore. So people will stop buying houses as quickly as they were before, all right? So the cheap money is no longer there. All right, now, so it'll hurt the financial stocks after a certain time, right? And why did JP Morgan stock fell by so much? Simple, because their CEO, Jamie Dimon, actually shoot out a warning, all right? They actually said that interest rates have hampered their profits, right? And going forward, interest rate can harm their profits even more. Yeah, okay, so with that, I won't want to do that because this is as good as catching a falling knife. If you see what's happening right now, right, Yale? All right, so it's totally different over here, all right? I'm not, yes, it looks low over here, all right, but it's not exceptionally low, all right? Let's check it out. All right, because if you do see it over here, all right, JP Morgan has relatively traded at a low PE for the last 5 years, 13, all right, and right now it's at 10. It isn't screaming like a deep undervalued over here. Yeah, all right. So no, it's not good enough a bargain for me. Yeah, all right. Okay. Now, Eileen, I've already done it. I've shown you just now. All right. We've got 145 for the 750 call. Yeah, all right. My order was filled. Okay. All right. Now, so also I just remember, Eileen, thank you very much. All right. Let me go ahead and fill in the prices. 145. All right. Now, the only reason I'm selling this is because I already own the stock. Okay. All right. Now, so this trade, all right, will pay me $400 in cash flow. That's yummy, yummy, yummy. All right, so I'm more than happy to get that amount over here. All right, Yale. All right, you're more than welcome over here. All right, so I'm going to bring this session to a close, everybody. Thank you very much for joining me this Friday again. All right, I will see all of you, all right, next Friday if I can, okay? All right, now I can't promise you at the moment yet because I may be tied down with some reunion gatherings. All right, nothing big because we have a max of 5 people, all right? But that also means we have to break it up into more separate sessions, right? All right, now, so if I'm engaged with some reunion gatherings over here, right, I hope you can understand we are going to the lunar festive season, all right, which is probably one of the biggest celebrations we have, all right, every year. All right, now, so if I can't host a session next Friday, all right, we will be back the week after that, okay? All right, I'll try as much as I can to host it, yeah? Okay, now, that's my promise to all of you, all right? But if it really clashes, I will have to give it a miss. Okay, thank you very much, everyone. All right, and Jimmy, as usual, all right, 恭喜发财 as well. All right, and may it be a prosperous year for everybody, okay? Now, thank you very much, and have a great weekend ahead, everybody. Bye for now. This is Terence.